For the wrap-up for today, the wrap-up will include what happened and the summary of the ECB preview. Sorry, my voice isn't at its best this morning. So this is the wrap-up for the live market open for March 10th. It's Draghi Day, it's Thursday. It's an important day in markets. But before we talk about the ECB, let's talk about what other things. Better mood in markets because of higher oil prices. Crude oil inventories came out as expected, but we've seen a drawdown in gasoline and distillates, and that supports oil prices, shows better global demand, and lifts markets. And comes after a few days of a bad mood because of China. But from China today, we had higher inflation, which is also good news. Still a growth there, nice picture, stronger stocks, and everything's okay. And of course, tension towards Draghi. Yesterday we had two rate decisions, and they both caused movements in markets. The Bank of Canada didn't do anything, but they were less dovish than expected. The Canadian dollar strengthened. Of course, it got some help from oil prices. The Bank of Canada is basically waiting for the government for its next move. In New Zealand, we had a surprise rate cut from 2.50 to 2.25. Big news, hit the Kiwi quite hard. More cuts are expected in the next quarter, so the Kiwi is certainly under pressure. Today's scheduled, our broadcast begins at 12:30. You'll see it on FX Street at 1:45 GMT, 1:45 here in the old continent, the ECB's rate decision about the rates themselves, and they'll also add a statement that more will be announced at the press conference. Remember, we will know only about the rates, but not about the tiered system. More about that soon. And Draghi's press conference begins at 1:30 GMT. It usually lasts a full hour until 2:30 GMT, until around 3:30 here in the old continent. Okay, so ECB, let's break it down. Expected to cut the deposit rate, which is negative, from minus 30 basis points to at least minus 40 basis points. If we don't have a rate cut, that will be a shock. That will be euro positive. Big disappointment. Many expected also to be cut all the way to minus 50 basis points, and some even minus 60, which is the extreme case. However, if they do it in a tiered system, that means the lower negative deposit rate applies only to some kind of assets or a certain level of deposits. We could have some of the sting coming out because there will not be a full negative deposit rate cut. So we should watch out for that, and we'll learn it only at the press conference. Okay, so be careful on the initial moves on the cut. Of course, if it's a big cut or no cut at all, if it's a big surprise in any case, it's significant. I mean, if it remains 0.30 or cut all, that'll be, of course, euro positive. And if it's all the way to minus 60, it's euro negative. But if it's somewhere in the middle, we'll have to wait for more details. The second big thing is the size of the QE program, which will be announced only at the press conference. Currently 60 billion. The program is already running for 1 year with success. Some expected to remain unchanged, but the median is more around 70 to 75 billion. That means a significant increase. Some expect even 90 billion. Remember, the ECB has a limited number of assets it can buy. We might have them announce that they'll buy different kinds of assets like corporate bonds or things like that. And perhaps more importantly, they currently have a limit to government bonds. They don't buy bonds that yield under the negative deposit rate. They can scrap this rule. They can say, we're buying everything. So if a short-term German Bund has a negative yield of, I don't know, minus 1%, it could become eligible for buying even if the negative deposit rate doesn't fall that low. Okay, very much a race to the bottom. That will be more significant. Other things to watch out for, the more complicated things, we mentioned some of them. The assets, what the instruments, the financial stuff that ECB buys, a tiered negative deposit rate could take this thing out of the cut. The next moves by the ECB, is it done for the foreseeable future, or will it introduce more moves perhaps in June? or September, or next meeting already in April. We'll have the first forecasts for 2018. And one wild card, a nuclear option, is that they'll buy non-performing loans of banks, what's called bad bank or bad assets, which will be going into negative territory. But this could free banks which are stuck with loans that everybody knows will not be paid, but they're not admitting it, and they're not lending to the real economy. That will free money, but will put the ECB in risk buying basically garbage. Okay, another thing to watch out for, forgot to mention before, regarding QE. Currently, the program after the recent extension runs until March 2017. That means a year from now they could extend it to late in 2017, 2018, or say we have no limits. That will also be impactful. But anyway, they always said that they could extend it anyway, so it's not such a big deal. In the last meeting, they announced that they'll reinvest proceeds. We'll hear Draghi repeat that, of course. And I guess that's it for the ECB. To summarize, first event is the negative deposit rate. Let's see how much it's cut. We'll have to watch out for the tiered system. Then at the press conference, we'll hear about QE. We'll hear about if it's expanded, what they're going to buy, and where's the yield limit. And watch out for the assessment about the economy in general. How bad are the inflation forecasts? We'll have the first forecast for 2018 about growth, about governments needing to do more and things like that. Anyway, first impact, the numbers, then the details. The devil could be in the details. I'll just remind everybody that we have the ECB needs to surprise markets. Okay, ECB needs to show that it's powerful. Draghi was a master back in January 2015, 14 months ago. He then announced QE, and he created expectations, leaks to the press, that it'll be this level, and then it came out much higher. Instead of 50 billion per month, they announced 60. Instead of program worth at the time around half a trillion, it came out over 1 trillion. That was a masterpiece. Back in December, if I'll show you the charts, he also created high expectations, and it just wasn't enough. This is the big jump here. Ran away. Okay. 460 pips in one day. He did deliver a cut in the negative deposit rate from -20 to -30 basis points. He did announce reinvesting in proceeds, but that wasn't enough because markets had expected more QE. Maybe we'll get that now. Okay, so that's the big event for today. Remember that we could have, if we have a huge announcement, we could have the Swiss National Bank intervening. Other than that, yeah, that's it. Before we go, I see here a chart for me. Oh, very nice stuff. Bon Vigilantes, yeah, I like their website. I follow it every day. I mean, I follow it on my RSS feed. So let's share this with everybody on the screen as well. Okay, it's a bit blurry, but oh, that's a better look at this. Yeah, the various banks. So negative deposit rate cut, I see most of them are talking about 10 basis points minimum, only RBS in this chart. 20, I've also heard 30. QA expansion in size, nothing. 15 billion, 20, 10, 20. Yeah, that's what we're talking about. Yeah, QA expansion and timing. Most of them, it matters less this time. Only one bank, Goldman Sachs, expecting 6 more months. More LTROs. I didn't mention that because it's not that important. Remove deposit rate floor. Okay, this is something I mentioned, the no yield limit. So we have 1, 2, 3 out of 7 banks mentioned here that say yes, the others say no, so it's mostly mixed. Other additional levers, buying semi-public entities, multi-tiered system, capital key, political issues. Yeah. Anyway, thank you very much. In general, we're talking about a cut in the deposit rate, more QE, but the details do matter. Okay, so join the broadcast at 1:30 GMT. Sorry, 12:30. Sorry, 12:30, 1:30 here in Europe, Central European time. And tomorrow we're not going to have the show as usual, but you will see a recording. We'll have an analysis of the ECB. In any case, today's ECB, of course, is a huge event, the biggest event of the week. Will have an impact, I believe, until the end of the month. I hope I'm not overhyping it and that it won't be a big disappointment, but I'm optimistic that the Draghi show will be great as usual. So thank you very much, everybody, for coming. Remember to wait for the news before really acting. I believe we'll have a very exciting day today. And that's it for today. So wish everybody success and see you, and bye-bye.